Okay, well, good morning, everyone, and happy Halloween. Um, we have a perfect Halloween breakfast with benefits for today. I'm Mary Preenan. I'm the Director of Communications for the Hudson Gateway Association of Realtors. And today we are going to be talking about taking the fright out of home buying. It does not have to be scary for your clients, especially your first-time home buyers. And with me today is Yvonne Ponce de Leon. And Yvonne is with Ridgewood Savings Bank. She's one of our new affiliate members. I'd like you all to welcome her. And without further ado, Yvonne, thank you so much for being here today.
Thank you. Thank you. Thank you for attending the class. I know it is a Thursday, and actually, we were just talking about the wonderful weather outside on Halloween. Trying to be a little festive. So I've got my little witch's hat and a little bit of a cauldron going on in the back. So hopefully, everybody will be able to enjoy. So today's title of the class is Taking the Fright Out of Home Buying. It's pretty scary out there, and not just for Halloween. But the market prices have gone up, interest rates are a lot higher. And so a lot of people are tentative, if not thinking twice about going out and looking to purchase. Also, the idea of what am I going to buy has been changing as well. So I had a lot of clients who in the past were qualified for purchasing single family homes. But now with the market prices starting at like $500,000, it's tough. They have to now be able to afford the higher loan amount. And again, now thinking, well, their idea would be I'm stuck, right, for 30 years paying this large mortgage and this payment. But that's not really the idea. So this class is more or less to kind of give them a little bit more of assurance, saying, it's going to be okay. There are things out there that will be able to be put in place to help you out in the long run. Because as we know, and as any type of real estate or mortgage professionals, this climate changes, right? There is really no set time for things to happen. Typically, right, we see a lot of the change going on within 5 to 7 years as far as the economy and what's happening. Rates go up, rates come down. Market prices go up, market prices go down. So again, understanding and having them feel a little bit more comfortable as far as what they can do in order, to make those changes once things do change. Um, right now that we're seeing there is an influx of a lot of home buyers. So again, a lot of people that were preparing during the pandemic, at that point were either they just got all in and then or waited, right? And then depending on employment and status, things were changing at that time as well. So the people that waited now are in time to purchase. Unfortunately, things have changed. So we're seeing a lot of first-time home buyers. The only thing is a lot of their properties and or ideas of what they're looking to purchase have changed dramatically. I am, and I'll tell you a little bit about myself, been a loan officer for about 20 plus years. I've been with various, not too many places. I'll say it out loud, Chase and City. And now I've been with Ridgewood, and it's been different as far as that, how corporate banking handles things and how community banking handles things. There's a lot of changes that have been going on, but what I've been seeing is that first time home buyers, when they come in, they're trying to figure out, I want to see if I can buy this single family home. And now the big switch has been going into co-op world. Now, in my stint as being as a mortgage officer, I did co-ops day in and day out. So I'm really not afraid of them. I actually encourage because those are the first time home buyer properties that people are going out to purchase. They're still in low prices and there's a lot of inventory. It might not be the perfect spot, but it might also be that first time place that they can move into where they could do a little bit of a fixer upper and, settle into their spot, wait a couple of years, sell, right? And you want to be in that perspective because you want to be there for when there's time to sell that property and then purchase the new one. So those are the things that I kind of want to put forth today. I did want to put a little more explanation as far as what we're looking for when it comes to co-ops and condos. I was fortunate enough to speak to some realtors at the event on Monday, and they were telling me about their nightmares about what's happening as far as co-ops and how things change and boards and things like that. So I kind of just want to bring forth my experiences as what I've seen as a mortgage officer as well. The other thing that we've been seeing is a lot of people going through divorces. I know it's not a happy thing to talk about, but it's been happening. So after the pandemic, we've also seen a lot of divorcees coming through, either selling and or refinancing and or looking for their own place to purchase. So those are items that we take a look at, and we look at things a little bit differently as a first-time home buyer. So as you know, to qualify as a first-time home buyer, you cannot hold anything for the last 3 years under your name or under title, right? Ridgewood does things a little different, and I'll explain that in my products later down in the presentation when we wrap up. But typically we say, as long as you don't have anything in your name by the time you close, you can't have two properties in your name. As one is selling simultaneously, it's not a problem. You're still a first-time home buyer, and take advantage of any of our programs that we have affiliated with that product. I want to talk about also certain grants that might be available for your first-time home buyer. So those are things typically that were not talked about. I know it sounds like it's a dreaded thing to do and get extra paperwork, but believe it or not, there are loan officers out there that are taking that extra steps to help you. We would like to have home buyers, especially our clientele, to participate in any money that might be eligible for them to help them with down payment and closing costs. And the big thing for you guys right now, right? Your fees. So if there is where the buyer's not going to be paying that extra fee, and I'm sorry, the seller, then they would have to. Some of our closing costs or grants would be able to pick up those fees. So then that way there's no miss as far as any cash being involved at the end, or any one of the borrowers trying to find, the extra money in order to pay any type of necessity fees that they have to pay. So those are things that typically, I want to see if I can touch on. So let's talk about single family homes. Right now, basically, it's regular paperwork. I know if anything, you've worked with tons of other banks. It's more or less the same with most mortgages. You want to make sure they're prepared. So that's the other thing. Making sure that your home buyer has some sort of relationship, right? That they've built something. They're going to build some sort of I guess a friendship between themselves, their team that they need to put together, and that they're comfortable and understand the process. So I like to consult more or less a lot of my realtors, if not their buyers. So typically I have a few realtors who are comfortable in saying, okay, this is what you're looking to get. Go speak to Yvonne first. Let her vet you. I don't pull credit in order to give you a pre-approval. I still do the whole manual pencil and paper, which is my favorite thing to do. I go over calculations. Things haven't really changed, and it's not rocket science to get these mortgages approved. There's a certain formula that we have to follow. As long as we fit in there, that's great. The additional formulas would be coming with any type of grants that they would be affiliated with, but you leave that to me, right? You leave that to your mortgage consultant to figure out, how is it that we can infiltrate some extra things that they will be able to get. It's not really your responsibility. The best thing would be is that you have your client, sit down with someone and formally do some sort of pre-qualification, pre-approval. A pre-approval is still not a non-binding document, so it could take a little bit. You want to sit down and go over documents, and having even just the client call you and speak to you for an extra 15 to 20 minutes to go over what they're looking for, exactly what they would do for you, is the best thing. So working as a team always seems to help me out as well. It would definitely help you in the long run, because you start to build that type of clientele that you have, and also that trust with that mortgage officer. I'm sure everyone now has their favorite person that they go off because they can get their deal done a lot quicker. The only thing is that what I've learned being as a mortgage officer and working in different types of institutions is that it's great to have that back pocket program. So not everything fits the one client, right? You want to make sure that there is something out there that might not, be perfect, but it's going to work. So you want to make sure that you have something in the back end that, oh, well, it's not working out here, let's just move on. There might be another program. There might be a program that will fit another client because you decided to, again, take a little extra legwork and find out what's going on with other institutions. There are major corporations, right? So we have the major banks, right, like Chase and Citi, where they're national. Um, then you have your community banks and smaller banks that only stay within their footprint. So we actually stay within New York. We are dabbling a bit in Connecticut. So if there's anything out there as far as in the boroughs, Nassau and Suffolk, Westchester, we go up to Putnam County and across the bridge into Rockland. We'll be able to help out any of the clients. Unfortunately, if they're looking to buy something in Albany, I'll probably refer you to one of my friends. But again, there's always an option out there for everyone. The bank itself has got nice little programs. And again, I'll recap that towards the end of the call. But I did want to talk about what documents the clients would need in order to have them prepared. So just even having a checklist of anyone who is open to the idea of me sending them some sort of flyer with a checklist of docs. Sometimes just handing that to your client ahead of time and saying, listen, if we're really serious about getting a mortgage, here's the documents that you're going to be needing. Get yourself prepared, right? So typically we're going to need anything about income, which would be your pay stubs and W-2s and or tax returns. Depending on some programs, you might need 3 years of tax returns, so they need to be prepared with that. A lot of clients out there too, I've seen where, we don't get pay stubs really in the mail anymore. They don't hand it to us at our desk. Everything is direct deposited. So understanding even as simply as going into their portal at work and trying to figure out where to pull out a pay stub, was a trying thing to do when pandemic came and everything became virtual. So those are things that you want to inform your client, right? Are you aware of how things work? If they're planning on taking things from their 401k, have you made that extra phone call to find out, is it possible? How much can I get? A lot of people really just think that, oh, well, I'll just borrow against my retirement and I'll, purchase, not being aware that there's sometimes a certain percentage they can take. So things like that, filter into a lot of the information that they should be aware of. Bank statements. So I always double check to make sure that they have sufficient amount of money. And even if it's not receiving a grant or any type of eligible funds in the banks, because sometimes what ends up happening is these grants either close, they run out of money, right? So I could be talking to someone today and they don't find something until April, okay? The grant that was available this year is now gone and it doesn't renew into sometime next year. And that money might not be available in time for that closing. So again, those things that they should be aware of. So clients, I always make sure that they understand the value of saving as much money as possible. So then they have sufficient enough of money, because we don't want a deal to die because we don't have enough money or funds. But the bank is definitely going to make sure that that's not going to happen. So bank statements is another. A lot of people don't collect bank statements anymore. I don't know how many times I get a request from the bank asking for paperless. So them understanding, either going to their portal or going to visit their local bank to double check to see if they can get copies of those bank statements. That also helps. You just also want to make sure, again, they're more comfortable with the process. It's very nerve-wracking. I've noticed a lot of back and forth, and we live in New York, so it's more like everything had to be yesterday. I know we live in a fast-paced place, but more or less the mortgage process and purchasing does take a while. I always like to make sure and have them understand that it's not going to be overnight. And yes, your contract might say that you have to close on this day, but typically it's on or about, right? So we all know we have that extra 30 days if just in case it happens to be we don't land exactly on the spot that's on the contract, because things do happen. Taking the ease of just explaining to them those little things, I think makes the process a lot better, and making them feel that, this is not going to be too scary. So talking about more or less the process on the co-op and condos, and again, preparing everyone. Banks typically want to vet the borrower, right? We want to make sure that they're able to afford everything. But we also want to double check the eligibility of the buildings that they're buying in, right? Um, we are not allowing them to purchase something or apply a mortgage towards a building that's not functioning correctly. We're going to double check financials. There's a questionnaire that they need to fill out, and that is the management agency would have to fill it out. So typically, sometimes I ask my borrowers, okay, well, who's your agent? Are they helping you out in the process? There's a lot going on, especially when it comes to condos and co-ops. Co-ops a little extra, but I am assuming that agents are taking the extra step and helping out their clients to fill out the information. If not, you do have a helping hand. I know a lot of loan officers have finally taken the deep dive and helping that extra documents when it comes to co-op and or condominium. Chasing them, we don't have the power. I think that is the biggest thing, is that there's not a lot of choices that we have when it comes to these buildings. It's whatever they want is what we need to give them. So we will be double checking again, like I mentioned, those financials, the co-ops. We're actually going to check the proprietary lease, just a page that says that it expires on a certain day. Certain co-ops don't have proprietary leases, so those are things that we like to know ahead of time. Um, and then, of course, certificate of insurance of the building, right? That everything's going to be safe for the client when they move in and they're fully covered. We are coming towards the end of the year. So understand that a lot of policies are also coming due. I've had a couple of deals right now where we had to wait because I could not get full approval for the fact that the policy had expired. And they're waiting last minute in order to get these policies, in order to get them renewed. Sometimes you get a great management agent that is on top of it, and 2-3 weeks before it expires, it's already in the process. But I am running across where it's 3 days, a couple of days before it expires, and they still don't have renewal yet. So those are things that you want to, take a look out for. Sometimes I reach out to my realtor for extra assistance because they have that in sometimes with the seller. Contact the management agent, find out if we can get some extra information, give them a little bit of a push. But typically, I work well with management agents. Like I said, I'm not afraid to deal with a lot of the paperwork. I have in the past helped realtors put packages together. The great thing now is Board Packager, where you guys can submit everything online. So that's the best. I just remember putting boxes together with separated documents and shipping them off to the management agent to help them out, which is copies, because they want 8 copies of an original. So I get it. I've been there. So just understand that, again, these things are super important when it comes to a co-op. The condos are the same, a little bit more easier. They're what we require: financials, insurance, and the questionnaire. But having them understand, especially when it comes to a co-op, the rules of the co-op. So we're aware, right, that these buildings are asking for requirements. We want people to move in here who have a 700 and above credit score. We want them to have no less than 10% as a down payment, and or 20 or 30. We want their debt to income ratio. So that's these terminologies and these terms the borrowers are not aware of unless they're doing their home buyer classes, which I love to push, and or consulting with someone like myself or loan officers that's knowledgeable, and letting them know, especially if we know that their income is only going to qualify them for these types of properties. So these debt to income ratios, right, that they can't surpass a certain number. And what I'm seeing here in Westchester, typically it's about 34%, if not less. Sometimes we scoot into Bronxville and Scarsdale, and they're about 28. So that makes those loan amounts a lot lower. And again, the frustration comes about when your borrower doesn't understand why they can't get this higher loan amount in the beginning. So again, explaining those items as far as when it comes to buildings and their requirements. The last piece is reserves. So they're looking for at least 4 to 6 months. I have already run into a building where they're asking for a year. And this is in Westchester. Typically, I've seen 4 to 6 here, and they're complacent with that amount. But if they ask for more, the borrower has to have said cash in the bank, showing that their down payment and or closing costs will be taken care of, and then having those amount of reserves in the bank, so then that way they have enough money in there for them. So those are the things that we look out for. Again, making sure that they're super prepared. I like to do any type of pre-approval, especially for any type of those properties, to fit the guidelines of the co-op. Bank is very flexible. They're able to give a good amount of money in order to purchase, but it is completely different when it comes to these buildings. It is what they want, and you don't want to send them in with a approval knowing that they're going to get declined because of their credit score, their debt, and or the reserves. So definitely looking out for those things as well. It all does require teamwork, like I mentioned before, and I'm more than happy to help you out with that. So now into my next part of the presentation. I did want to share a little bit. I have a small PowerPoint that I did want to give. Let me try to see if I can do this. I share. Perfect. So Ridgewood, right? Let's see. I talked about myself, right? 20 plus years. Gotta change my picture. Mortgage checklist. All right, so I did put this out here just again, a screenshot, a picture. These are typical documents that we're going to be looking for when it comes to your W-2 employees, self-employed employees. I didn't talk too much about that. We do deals with them, but again, it's a little more tighter. They're self-employed, right? Added more risk to the deal. So we want to make sure that their tax returns are reporting what they're taking in. We're not going to say no if we have retired borrower. So if they're just receiving Social Security and pension, that's income. We're able to actually gross up the Social Security income as well. Alimony and child support, right? Extra income that's coming in. So these are things that we will be able to use, not a problem. We do have a program that I work with, and you'll see it towards the end, with Community Housing Innovations, and it's a non-for-profit in Westchester, handles properties in, Westchester and Nassau and Suffolk. And they also accept social services, Section 8. So that is income. There is a program as part of the Section 8 program that allows borrowers to purchase. And the money that they are receiving for their rental or their apartments or whatnot can now be flipped over to be used for mortgage payment, and they get it for 15 years. So that's an extra add-on that we can use, and we can use it with our programs as well. So that's extra income. So in case, we have to open up our doors, to everyone and make sure they all understand that we're able to, lend. Those are things that you can look out for. So if you happen to hear, oh, I'm receiving and I'm getting something from Section 8, send them over my way. There's also grants available out there that be able to help them that can go up to $60,000. So that stuff helps up in the long run. So you can see the other documents as far as the purchase, co-op, and condo, and bank statements. And of course, any type of large deposits will need to be questioned. All right. So what are we going to look for when we end up having you approved, right? We talked about this. It's going to be your credit, right? The income, debt, how much money, and then the property itself. We're going to do full appraisals on everything. Be wary about properties that single family homes that have those basements with the extra doors that they can come in and out, and an extra meter. So I'm sure you're completely aware that some banks will not accept that, okay? That they would have to probably cap the line for the gas and put the stove away. But if it's a full out apartment, they're gonna want the whole kitchen removed. So things to look out for when you're looking for places. I know a lot of borrowers, they want some extra income come in. Not a problem. You can do whatever you wish with your home after you purchase it. But during the process, a single family home is a single family home. Okay. So first-time home buyer programs and grants that can help with down payment and closing costs. So Ridgewood's got a first-time home buyer program called Good Move. This was my starting and my baby program. I came from another bank and I got a call from a friend who had told me that this bank was opening up and they were doing a lot of first-time home buyers. I had already been out there doing a lot of grants and programs in the city and gave it a try. So we started with this program called Good Move. They allow up to 97% LTV, right? So they just have to do 3% down. Two families, 5% down. And if you can see the CLTV of 110, that means we're able to allow and layer grants that might be available for these types of borrowers, okay? And like I mentioned, it could be the boroughs, could be Westchester and or Long Island. Loans can be used for purchase. Now, here's that comfort spot that we talked about in the beginning. Limited cash out refi. So we can use also these programs for refinancing when rates drop, okay? We can take out some extra money as well. So those things are available and we can still use these income limits for these types of borrowers. There is also, which I did not bring the flyer for, a modification program. So you've heard it maybe streamline from other banks, recasting. We do a modification. So you have to have a Bridgewood mortgage. If rates do come down, right, you don't actually have to go through an entire refi. We will streamline it. Few pieces of paper. We don't do an appraisal. They really don't run anything else on these types of modifications. You pay a fee and you bring down the rate. So it takes the little fear of, am I going to get stuck with this rate forever? You know, do I have to go put in more extra money in order to do a refinance? So those are things that are out there as well for your clients to take advantage of. We're able to use non-occupant co-borrowers for this program. So young kid looking to purchase and mom needs to help out because of income, not a problem. We will not use mom's income for the income guidelines, but we will have to put them on the mortgage. They don't have to be on the contract and they don't have to be on title. We allow up to 130% medium income. And again, those numbers mean that if in Westchester, your household is below 125,000 or so, we're able to use this. And today the rate is, let's see, yesterday, 5.875, which is still nice today. Multifamily homes and rentals, not a problem. We're able to use that future rental income, 75%. And you get a closing cost assistance of $2,000. I know it's not a lot, but we're able to layer these with a lot of other brands that might be available at that time. Debt to income ratio is 48%, so we can stretch them up to 48, and a minimum score of 620. There's no income cap if a property is low or on the majority census tract. So again, if they're having to buy somewhere in Yonkers and it falls under the census tract, I have no income cap. So you can have a borrower that's making more than that 125 and still fit into this mortgage. The next one is Plus. So the Plus is the same as the Good Move. It's just as an extra add-on. And you can see that big number down there where it says closing cost assistance up to $10,000. So they do offer $10,000. Now, this is not a grant. It's not a repayable. It's more or less like a gift. So we're giving them to use that, but it's only for closing costs. I've been using this a lot when it comes to the co-ops. As we know, co-op closing costs are about $4,200 to $4,500. So we're going to have a surplus of money. Let's use that and buy down the rate. So Good Move Plus today is at 5.75. I'll use that extra money and even buy 2 points if possible and bring them down to like 5.5, 5.25. So those are things that are just an extra add-on, which will lower, right, their mortgage payment and their DTI when it comes to a co-op guidelines. This product, unfortunately, is not available in Fairfield County. And we can use this again for purchases, limited cash outs, and or cash out refinances. And again, most of our products go for a co-op, condo, single family, and multifamily homes. Check out. DTI in this one goes up to 50%, but they do have to have a credit score of 680, okay? The minimum score is 620, but if they want to go up to 50%, then 680 will work. Again, we're just stretching out their income to make it work. It's great if they have compensating factors. But again, that product is here to help them as well. Last one that we have is our Sony May. Sony May is our state bond program. You don't have to leave Ridgewood in order to partake in Sony May. I do all the paperwork. And again, it's a little extra paperwork. A lot of people kind of steer away and they're like, oh, I heard this is going to take like 6 to 8 months. It really doesn't. As long as the package is clean and we have the paperwork up front, it does not take a long time. Usually the same issues that would happen in any other file to make them take a long time is what takes for Sony May to take a while. Sony May borrowers are actually locked for 120 days. So I like to use this one a lot too, sometimes for a co-op, just because sometimes we're at the mercy of the board, right? We need to wait for them. We have to wait for attorney to be on time. And then just getting a closing date takes a while. So we have the extra time through a Sony. Sony does offer a down payment assistance as well. It bumps the rate up a bit by 3/8. But if they really need that extra money, they can get up to $15,000 or 3% of the purchase price. Sony May does offer these programs, Homes for Veterans, which is great. Is not the same as the VA program, but they do have nice perks that comes along with the Veterans program. The achieving and the low interest. The achieving is that kind of like the 80% AMI kind of feel, and the low interest comes with the higher AMI, so like 120, 130. So if they make more than 80,000 or 110,000, I'm sorry, it's actually 125 or 130, then we go into the low interest. The rate is a little bit different, but not too high. So it's kind of like a misnomer when it says low interest, but it's a great program. It just only requires a few more extra paperwork requirements, but Sony May is there. This is my backup program. So if in case my other two don't fit, Sony May is very flexible and they do allow a lot of the layering as well. Okay. So grants available upon eligibility, right? We have a home buyer dream. So right now, if you haven't heard, the Federal Home Loan Bank issued an allotment of money this year. You have to be a member of Federal Home Loan in order to get some of these grants. It was up to $19,500 this year. There were two. One was for people under or at 80% AMI. Ridgewood, actually, we exhausted all our funds, so we're done for this year. Typically, they renew between February and March. This year, they started in February. Hopefully, they come back again, and it's going to be the same amount of money. But the plus were for 120% medium income. So borrowers that are making that higher income, as long as you do not surpass the income requirement for them, you can get 19,500, which is unheard of. So typically a lot of people, who are making more money, right, are better well off than our low to moderate income earners, are not getting any assistance or help. So this 19,500 is nice. I work with HPD. So HPD has Home First, which offers 20% of the purchase price and or up to 100,000. So any client that's buying a single family home at 500,000 is going to get the 100,000. This one does take time. It is a lot of money. They do have a very strict vetting process, paperwork. You have to go through your courses, but it's there. I think I've done 2 or 3 this year, one at 100,000 definitely for a purchase in Staten Island. And it is a program that I put my faith in. There is money out there that they'll be able to use and they'll be able to acquire. But again, this is boroughs only. CHI, which is the Community Housing Services, which I mentioned before, Westchester, Long Island. If they qualify, they'll do a Sony May and you can get the 15 there. And then if you qualify up for the 60. Now the CHI is a little different. Half is used for down payment and closing costs, and the other half is used for rehab. So I believe that was a question that I got at the expo on Monday was, do you do 203s and stuff like that? We particularly do not do rehab mortgages. We don't do construction mortgages or loans. but there are grants out there that will help you with a little bit of the rehab work. Now, it's not a full gut, okay? You can use a Sony May program. We particularly right now are not doing them. We were. Hopefully, we're going to be bringing it back next year. The Sony May programs where you can actually do a gut job because you're going to finance a lot of that rehab work into your loan is also available. There are also other affiliated grants available with Long Island. So Long Island Housing Preservation has got a lot of stuff out there, depending on the counties that you're looking into. There's some available grants that are available. So those are things that we can definitely use. It would take a lot of pressure off your borrowers, knowing, especially if they're eligible, to partake in a lot of these programs and things that you will be able to use in the future. And then definitely see if, this is something that would help you, because again, it's always word of mouth, right? You're not good until your last deal is over and then they pass on the word. It's like that for us as well. So knowing that that family was able to get a lot of information from you and or even extra money from their lender, is a great thing. And I think it also takes the fear out of that purchasing and brings you more business for the upcoming year. So I am done. I know there's about a half hour left, but I figured let me leave it for some questions. If anybody wants to ask anything, I am here.
I have a question.
Sure.
You were talking and you mentioned a lot interest rates of 5 point something, 5.5, 5.6. Is that where we're at now, or was that with some of the programs that you were,
It is with the program. So right now, our first time home buyer programs do have those fives and 5.7, 5.8, right? Anything in the regular, so conventional, again, the bank just doesn't do first time home buyers. So let's just say they don't qualify, right? And they want to still get a lower rate. Right now, I believe the 30-year was at 6.25.
Okay.
So that's still decent.
Yeah. There's a reason why I ask, and it's, and I'm glad that all these programs are available.
Mm.
But just like it just brings me back also to the time where a lot of people were getting stimulus, and we do have clients that never receive any stimulus, and these are clients that are not rich, but they're also not poor. Let's say like a retired teacher or people, who are just out there like in the 90s, in the 100, and also they have good credit. So
Mhm.
what, I see that there's a lot, to get some of the clients that have less income, or maybe in maybe better interest rates because their scores are not that great. Is there
Right.
any incentive for the people whose scores are like 799, 750? They have really good credit. They're not as let's say as poor in terms of the income, but they're also not rich. They're like,
Middle class.
income is 90, 100.
Yeah.
Is there any incentive for these people,
So
to
remember that grant that I was talking about with the Home Buyer Dream Plus? This one?
mhm,
The
mhm.
Home Buyer Dream Plus goes up to 120 medium. So if we're talking about a
Okay.
client that's making 120, 130, right? We're getting by, paying our bills. We're not rich, right? You can get the 19,500. Just know that a lot of these little extra incentives, they all run out of money. Just like the stimulus did, right? Not everyone got everything when they were supposed to. But the 19,500 is there. So we are able to offer that. Now, when it comes to rate and extra incentives, my bank is different. So community banking is across the board the same for everyone. So if a person has 800 or 620, you're still going to get the same rate and the same
Okay.
mortgage. Yeah.
That's what I was wondering, because I don't know if it was always like this, but
Mm.
at one point it was almost like it was a good thing if you had good credit, you know.
Right. So if you went to, let's say, City, right? And I can only speak up because I used to work there. So if you went to City, they have tiers as far as your credit score. So if you were rated at 800, you got a better score than the guy who had 720. And that was more or less your incentive. City also, and or a lot of corporate banking, they say, if you bring me $50,000, I'll take off a quarter off of your rate. So they have things like that. Again, like I mentioned, this bank is a bit different. It's community. We can't do that by law. We have to treat everyone the same. But yeah, those incentives are there. But the thing is that sometimes those rates are still going to be a lot higher than even just the smaller banks as well. So kind of weighing the extra incentives as far as what's going to be good for me in the long run.
Yeah, thank you. Thank you for the information. And yes, you're right. That, the bigger banks, their rates are completely different,
Yeah,
and they
yeah,
can do that.
I know.
Thank you.
Trust me, I've been doing this for so long, and we all try to see, what is the best bet. And I've been in the business where at this point I've known that if my scenario is not going to help you, but I know someone else that can communicate and can get you a better deal, by all means, I don't mind, passing. It's happened where like if a co-op got declined by my bank or whatnot, I've called a friend and said, hey, can you do me a favor? I think you guys just did a mortgage in here not too long ago. Can you help them out? Here's the info. And I would just pass them along. It's more or less like a seamless pass. But yeah, I get it. I try to help out as
You
much
know,
people as possible.
I have one last question, and it has to do with co-ops. I've
Yeah.
noticed, I have noticed lately, I mean, we all know what's been happening in Florida. We're not in Florida, thank you, Lord. But I've noticed there's certain addresses, okay, certain co-ops that I've noticed all of a sudden in the last few months, it's almost like everybody's selling, okay? Then,
Hmm.
of course, you go in and you take a look, at maybe a few years ago and now, and then you notice that there's a lot of assessments that are happening. Where the usual HOA fee might have been 900. Now, they're paying like 1,200, 1,400, and so on and so forth. And of
Hmm.
course, then you start seeing a lot of the people that were either completely paid off or, decide that that is too much HOA. Do you
Yeah.
guys do, but that's, this is something that I am saying because I am a realtor and I have access and I go in and I look, but is this the kind of investigation that you were talking about that you guys do?
Yes, because that is something that if because we're going to look at these financials and we're going to look at the questionnaire. And like I had mentioned before, the biggest hurdle with us, and I've had a few realtors in the beginning who get a little pissed off at me just because of like, you're taking way too long, to get this done because we need to move forward. And I understand. It's just that if I don't have the information presented in front of me and I don't have it reviewed by a co-op, if the bank says no, there's no mortgage. So it's a waste of time at the end anyway. But
Mhm.
yes, the questionnaire is one because it's a specific question as far as what's been happening with the maintenances. And they look into the most recent financials. And if there are way too many assessments, they will decline because of too many overly assessments. I've had that happen to me this year once. I haven't had it happen to me in a while. And when it did, I called my co-op review. I was like, what does this mean? And she said, did you notice they have like all these assessments by the end of the 2 years, these people are going to be paying an extra maybe
Exactly.
$500 on their maintenance fees. And she
Ex-
goes, how are they going to afford that? So again, they really go into it as far as looking into their documents and everything else. We'll make sure that this building is tight before we even lend.
Mhm. Is that a trend that you think is going to continue to happen for the rest of the co-ops that are older than like 40 years?
I think at one point or another, a lot of these buildings, they're going to have to start figuring out it's what's happening too is they're not putting a lot of money in in the reserve accounts. And so at the end, they're going to run out. And so they're going to have to end up getting it from somewhere. So yeah, I mean, I live in Yonkers. Some of these buildings a little run down on the outside. I don't know how they are on the inside, but I'm assuming that at one point or another, it's going to be a trend. But the banks at one point, they're going to have because you can't decline everyone for that, right? At one point, you're going to have to see, okay, how far is it that we can go? So there's going to be a turning point in there, but they still have to be aware of what they're going into. Every client needs to be aware.
Thank you. Thank you. And I hope that you are going to be sharing your information again at the end. because I can sit here and talk to you for a whole hour.
Oh,
Thank you.
I can talk for hours too, but if
Thank you.
anybody else has another question, I'd be more than happy to help them. Let's see, I think we have.
Can you please review the questions in the chat?
Yeah,
Yep, that's what I'm looking at.
yeah. Someone's asking about more information on Section 8 for a mortgage.
Okay, so the Section 8 program, they basically, social services, right? So there's out there a program that would help people to pay their rent. They pay some portion and then the government pays the other portion. You can move into a housing program. I'll try to find one. The name of the organization. There's a few in there that they go through, but there's one specific housing program with Section 8. They go through their process. They see if they're eligible. They can't carry, the caveat is they can't carry a lot of money in their account while they're going through this process. So said borrower still has to have some cash put away, even if it's, Mom, hold my money, right? Keep it in the account and then gift it to me so then I can get the deal done because we're able to get that and use that, if anything, for their deal. But Section 8 will give them. So if let's say they pay $1,500 a month for their rental, they'll get approximately close to that to help them with their mortgage payment. And that is a huge bump, especially if you're trying to get, a condo, because, condos these days don't run in the 300,000s, they're running in the 4 and ups. So those loan amounts are going to be a little bit more higher. So getting that extra money, and they will give it to them for 15 years, which is awesome. The only thing is, we don't have any say or power to start the process for them. They have to start the initiative process. So you have to send them and say, plant the seed. Listen, if again, this is someone that you've been working with for a while, look into these housing programs. But if they come through and you have someone that it is the real deal.
Do you have names of these housing programs?
Say again?
Do you have names of the housing programs that
I will
participate
try
in
my best. What I'll do is, Mary, I have 2 clients that are going through the programs. Off the top of my head, I cannot remember it. If anything, would it be okay if I email it to you? Or Kiara, you can
Yes.
also, let me just let's see if I can do this. Maybe in the chat box, I'll put my information in here.
That'd be great. I can message you directly. Thank you.
Yeah, let's do that. And then you can just email me and then I will send you the program. And number. That's my email. Cell phone and
Thank you.
email always goes with me. Yeah, just send me an email. Hey, just a quick reminder, you were talking about Section 8, and then I'll get you the names of where they have to go. There's a specific program in Westchester. There's a specific one for the city as well.
Okay, perfect. Thank you so much.
Mm-hmm.
Does anyone else have any questions for Yvonne?
Good morning, Yvonne. Thank you for your presentation today and for your costume.
Thanks.
My question was, you had mentioned if you get a loan at a higher rate and then later the ability to change that rate. Can you talk a little bit just about what's the time frame and the fees involved in making that shift?
Sure. So the
Thank you.
modification program that Ridgewood has is that, well, the time frame is pretty quick. Well, I want to say 60 days, as long as they give me what they have to give me ahead of time. It is literally 2 pieces of paper. They just fill out their information. Half the time I'm filling it most out myself because I can pull out, because I can see the Ridgewood mortgage itself and fill out the info for them. The fee it's 3/4 of a point of the balance of the mortgage. And then there's a $950 attorney fee. So the attorney also goes in and kind of does their quick title work, nothing nuts. No appraisal is needed. No pay stubs, no W-2s. There is really no formal closing. You do have to go to a branch, half hour and close. And it's not bad. And what we're able to do is, let's say they lock in at a rate today at 6 3/4. And in a year or two, the rate comes down to 5 3/4. You can go and try to modify. There is still no set rule how many times you can modify as well. So you can come back and cross fingers, rates do come down again, and maybe we might be staying in the 4s, years from now, then we can do that modification again. But sometimes those modification fees, so that cost, does not over exceed a refinance cost. So let's just say if someone who has like a $400,000 mortgage and they wanted to refinance, closing costs are going to be about 12 grand. Because we have to reset escrows, there's all that goes in there. And that modification fee is going to be a lot less than that.
Thank you. And do you have to pay that fee up front, or can you then wrap it into the loan?
Oh, that would be fun, but no, you do have to pay it.
All right, thank you.
You're welcome.
Anyone else have anything for Yvonne? Nope. We will be, we are recording this and we should have it for you later this afternoon or tomorrow morning. But Yvonne, I want to thank you so much for your presentation. A lot of great information out there. Love the costume and the backdrop. This is perfect for Halloween.
I know, you
And,
too.
yeah, that's like so cool. Anyhow, thank you all for attending, and have a wonderful Halloween and a wonderful rest of your week. Thank
Thank
you.
you for having me. Enjoy.
Bye-bye.
Bye-bye.